Welcome, crypto fam, to the #1 daily Bitcoin pod. In today's show, I'll be sharing the latest technical analysis, as well as Adam Back slams EVN misdesign as the root cause of the Bybit hack. Also, breaking news, $65 billion Citadel Securities is looking to become a liquidity provider for Bitcoin, betting on President Trump's embrace of the industry. And this is a big deal because they're responsible for 35% of the hedge fund stock trading. So buckle up. We're heading to the moon. We'll also be discussing SEC Enforcement Division closes investigation into Robinhood, as well as Hong Kong investment firms board gives the nod to more Bitcoin buying. Load up the truck. We'll also be discussing crypto ETPs, see 508 million of outflows as the Bitcoin sell-off continues and we continue to correct. Also, breaking news, Strategy scoops up 20,356 Bitcoin for almost $2 billion as I projected in yesterday's stream. They're fast approaching 500,000 BTC, like 499,000 and some change. And speaking of the Giga Chat, Saylor also proposes Donald Trump buy 4.2 million Bitcoin for the U.S. Strategic Reserve. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. If you're new to the channel, very important to smash the likes, then go ahead and subscribe to #1 Day of the Bitcoin Pod. Then hit the bell icon, turn on notifications to receive daily premium crypto newsletters every single day, 7 days a week, just like this. Today is pod episode 1915. I'm your host, JV. It's Monday, February 24th, 2025. Market is correcting. We're just in the 94,000 level at the time of this live stream. And let's pull up some Coin 360 so you can get a gist of the overall market. And as you can see on your screen, Bitcoin just above 94.4, Ether down 5% after recapturing 28 yesterday. XRP is down 5% and the bulk of the market correcting and in the red. And checking out coinmarketcap.com. The current crypto market cap stands just above $3 trillion. The Bitcoin market cap on the decline, currently $1.87 trillion. We have roughly 102 billion worth of volume for the past 24 hours. And Bitcoin dominance back on the climb at 61.1%, with the Ether dominance at 10.5%. Even. And checking out top 100 crypto gainers past 24 hours. We got Story up 20%, Say up 4%, and Barachain up just shy of 3% as the majority of the alts are correcting and in the red. Are you bullish on any of these alts for this bull run? Do let me know. And checking out the crypto bubbles. We get a visual perspective on the daily. Safe to say 95% of the market wrecked and in the red. Zooming out on the monthly, similar as far as 95% of the market wrecked and in the red, but pretty substantial losses overall. Some of these top coins, 30, 40, 50% down, so be careful with the shitcoinery. And checking out the Crypto Greed and Fear Index. We're rated a 49 neutral. Yesterday, 50. Last week, a 51. And last month, a 75. And checking out the time chain calendar. We have 164,870 blocks until the next halving of 2028. And we're currently on block number 885,130, hence we're going up forever, Laura. And you currently exchange one fiat monopoly tulip bulb dollar for 1,056 sats. So pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net and cop yourself one of these exclusive camouflage Bukele 2029 masterpieces. Let's start with the 1 minute and work our way backwards. So this is the 1 minute chart via Coinbase, via Trading View. And you can see we do have a bull target all the way in the red, sitting at 96.7. We're currently trading at 94.3 in real time at the time of this live stream. And zooming out from the 1 minute chart, let's take a look at the 1 hour. And the 1 hour chart shows us we do have also a bull target and a bearish pennant, so a little bearish right now today. We do have a bull target of 104.5, which is approximately a God candle away, $10,000. And we do have a bear target, which is on the radar for the bearish pennant, sitting just north of $90,300. Let me know which way do you think the price action will likely climb towards the bull target or the bear target? Holla. And in between this, I will read your comments out loud as soon as we're done with with the TA here. And again, welcome everyone joining us. So this is the 4-hour chart. We still have the mega bull target of 130, which in my humble opinion, I feel this will be the next leg up once we can conquer the current all-time high, which is 109.3, which we achieved January 20th, Inauguration Day, the morning the president got sworn in. That's current price discovery. So once we break that, I personally think we'll hit the new all-time high somewhere between 120 and 130. So I like this 4-hour target. We also have a red target on the 4-hour, sitting just above 104.5, and then a couple of bear targets, one all the way down at roughly 82,000, and then a super bear all the way down to $68,000, which is below the previous all-time high of the previous cycle. So I think that is very unlikely, but still you should always be prepared for anything, especially with these crazy ass markets. But zooming out on the daily, we are forming another red candle, unfortunately. We did get a bearish weekly close as well for the week, which we'll pull up here shortly. But we do overall still have the rising wedge formation, but we have been trading sideways, not really much happening since January 20th. We're looking to recapture all-time highs. And zooming out from the daily, take a quick look at the weekly. And the weekly chart says we're going up forever, Laura. We do have a bull target sitting at 124,000, and this particular target has been present on the weekly chart for several months as I share it with you virtually every day. And as you can see, we did get a red candle close for the month, or it's so minuscule it's hard to tell. So we've virtually been trading sideways for several weeks. And zooming out from the weekly, take a quick look at the monthly. We do get a monthly close in roughly 4 more days. So things are looking bearish, unfortunately, for the month of February. Typically, it's bullish, especially the year preceding the halving, but unprecedented times. So history doesn't always repeat. Oftentimes it rhymes, but there's no guarantee there. But considering February has been bearish, maybe we'll continue with the bullish momentum in March as we're still in the thick of the first quarter of 2025. First quarter would officially be over at the end of March. So we're just past halfway mark, maybe 60% in. Still got a long ways to go. So you let me know where you feel the pretty little bitty will likely take us next. And again, welcome everybody joining the live stream. As the headline here reads, Adam Back slams EVM misdesign as the root cause of the Bybit hack. And also some breaking news. This is actually the big news of the day. $65 billion Citadel Securities is looking to become a liquidity provider for Bitcoin and crypto, betting on President Trump's embrace of the industry here in the United States. They are responsible for 35% of the hedge fund stock trading. Buckle up. We're going where no man has gone before. The moon, broskies. The crypto community is divided over the root cause of the Bybit hack, with Bitcoin advocates attributing it to the misdesign of the Ethereum virtual machine, while others argue operational security failures were to blame. That's right. Blockstream co-founder Adam Back, the OG himself, criticized EVM tech in his post following Bybit falling victim to one of the biggest crypto hacks in history, losing $1.4 billion worth of Ethereum related tokens. People are misunderstanding critique of repeated EVM hacks. The latest and the biggest or largest Bybit, 1.4 billion, missing the point. EVM can go to zero. No one cares. The problem is the EVM dumpster fire hurts the ecosystem credibility, which unfairly bleeds over to Bitcoin. Many in the community push back against Back's EVM criticism, pointing at weakness in operational security around multi-signature wallets rather than the flaws in the EVM. Let me know where you stand. Quoting him again, another day, another EVM contract hack, he wrote. Complex, fragile, blindside, and unsecurable. Yikes. They have been losing billions per year for years straight. 0 days since the 9-figure loss on ETH toggled again. So I think he's just sick and tired of seeing all these hacks. He also posted this meme here. This meme is a fantastic illustration of the EVM misdesign root cause of the Bybit ETH wallet hack, and half a dozen other blind sign rooted hacks going back. Picture says 1,000 words. And rejector sign, I mean, it's pretty crazy. The cryptographer went on to say that Bybit's incident had nothing to do with security of his hardware wallets, but rather the EVM complexity of properly verifying transactions on the hardware wallet. Now, if he says it, I believe it because he's one of the true cypherpunk OGs that some even believe is Satoshi. And if he is not, many believe he obviously would be one of the few who actually knows Satoshi's true identity, and he's a super genius. So shout out Adam Back. He also argued that the Bitcoin ecosystem is free from such vulnerabilities. Precisely. That's why be careful. I posted a post earlier. You know how the Ethereum symbol kind of looks like an empty wallet? I wrote something like, Ethereum is the cryptocurrency choice of scammers and brokies. I genuinely believe that because everyone who tried to hack me have always been pro Ethereum. And trust me, they try to hack me all the time by sending me shit on Telegram or WhatsApp and things of this nature, but I know better than to click on the shit. But it's always from someone promoting Ethereum. They'll have like a picture, like literally the last person who tried to hack me had a picture with him and Vitalik. And I'm like super fucking sus anytime I see anything related to Ethereum and people reaching out to me. But you can't even make this shit up. It's just they're crypto of choice. But anyways, back to back. The whole point, it kind of sounds dope, back to back. The whole point of the hardware wallets is to verify on the device screen how much you're paying and what address. That doesn't work with ETH due to the EVM complexity and state size. This is the problem. Back wrote, adding that ETH on the hardware wallets didn't even display the address for Bybit. Clearly a problem. Still, there was no shortage of opposition to Back's perspective on the root cause of the Bybit hack. While we respect Adam Back's viewpoint, someone said, in the wider conversation it ignites about blockchain security, Hacken doesn't fully agree with the issues highlighted by the Bybit hack, exclusive or to Ethereum or the EVM. And who knows, they could be in the pockets of Ethereum or the Ethereum Foundation or anyone behind the EVM. So, you know what I mean? Trust nothing, verify everything. Multi-sig vulnerabilities and operational complexities are a shared challenge across the ecosystems, including Bitcoin, according to this guy, Buterin. And not Vitalik Buterin, but someone with a different spelling and the same pronunciation. Ironic enough. Quoting him here, even Bitcoin's multi-sig setups, though simpler by design, remain susceptible to risks such as human error, phishing, or advanced attacks targeting signer devices and workflows. Lex Fisson, co-founder and CEO of Swiss blockchain analytics platform Global Ledger, echoed the sentiment, quoting him here, in the latest Bybit hack, only one ETH cold wallet was affected, while other wallets remained secure, suggesting the breach could have resulted from weaknesses in operational security around cold wallet transfers rather than a fundamental flaw in the EVM itself. Either way, be super sus of it all. Fisson also highlighted that Bybit's compromised wallet was multi-sig and that the attackers likely trickled signers into approving or tricked the malicious transaction. So obviously multi-sig requires multiple people to sign off on the transaction, and they tricked them all. It's possible that the exploit came through the EVM, but we can't confirm it at the moment. I think if Adam Back's saying it's the EVM, I tend to believe Adam Back, but that's just me. But quoting this guy, nearly all decentralized exchanges rely on the EVM, while centralized exchanges like Coinbase, Binance, and Kraken use proprietary trading engines. Bybit isn't decentralized, but they may have used the EVM in some capacity. To what extent remains unclear. And as the debate continues, Ethereum co-founder Vitalik has yet to publicly address the accusations regarding the EVM's security vulnerabilities. Anyone notice he's been extremely quiet as of late? He didn't really hear much from him nowadays. But anyways, we'll be keeping you posted with the Bybit hack. And as I mentioned earlier, the big news is the 65 billion Citadel Securities looking to become a liquidity provider for Bitcoin. As the pretty little bitty goes, the doing, and the Nippinator indicator never disappoints. Our next story, we're going to be discussing the SEC won't let me be as their enforcement division closes the investigation into the Robinhood. Cool. They seem to be dropping all their cases on everything except XRP, ironic enough. The U.S. SEC closed its investigation into Robinhood less than a year after issuing the online brokerage, the Well Notice. The SEC's Enforcement Division informed Robinhood February 21st that it had concluded its investigation and would not recommend any enforcement action. The SEC was wrong. Robinhood disclosed this information today in an announcement, quoting them here. This investigation never should have been open. Exactly. Robinhood Crypto always has and will always respect federal security laws and never allowed transactions in securities. Remember, the SEC claimed everything was a security. Security regulators have been investigating Robinhood's crypto operations for the better part of the year. As reported, Robinhood's U.S.-based crypto business was subject to the SEC Wells notice May 4, 2024. At the time, the SEC made a preliminary determination to recommend enforcement actions tied to alleged securities violations. You can thank Gary Gensler on that one. Last month, Robinhood reached $45 million settlement with the SEC over accusations that it violated more than 10 security laws. Then, Jan 13th, the order concluded Robinhood entities admitted a certain findings put forward by the SEC. And in closing the chapter of the SEC investigation, Robinhood urged the regulators to drop its regulation by enforcement posture and provide the industry with clearer guidelines for digital assets. Amen. Now, President Trump's administration has signaled major policy shifts ahead for crypto. Shortly after Trump took office, Jan 20th, the SEC launched the Crypto Task Force dedicated to bringing regulatory reform to the industry. Will they go after the meme coiners? I think not, because Trump's a meme coiner, ironic enough. the POTUS. The new task force is being led by pro-crypto SEC Commissioner Hester Pierce, we know as Crypto Mom, who has vowed to clean up the mess made by No Claire Gare, a.k.a. Mr. Gensler. And in addition to Robinhood, the SEC's enforcement actions against industry players like Coinbase, Binance, and Ripple may be dead in the water, according to the former SEC official John Stark. That's right. Stark made the observation after the SEC requested a 28-day extension to answer Coinbase's petition and the ongoing lawsuit against the exchange. Quoting him here, expect all crypto-related appeals, including the appeal of the Ripple matter, to pause or even more likely to be fully withdrawn. So let's see if they pull back on the Ripple Labs thing that's currently open. But although the SEC's Crypto Task Force has only been around just over a month, it has already met representatives from the Blockchain Association and all that kind of stuff. Here's what's going down in Hong Kong. Hong Kong. That's right. Their investment firm's board gives the nod to buy more of the bitty. Bitty little buying the little bitty, pre-low bitty going up in Asia. That's right. Hong Kong Asia Holdings Limited has increased its Bitcoin holdings to nearly 9 of the bitty, just a week after the investment firm saw its share prices double after buying its first Bitcoin. What a great strategy. HK Asia, the Hong Kong-based investment firm, said yesterday in the announcement that its board has approved the company to further increase its Bitcoin investment, and shared that on February 20th, it purchased 7.88 BTC for a total cost of $761,705. It added that its latest Bitcoin buy was financed through internal resources and brought its total Bitcoin holdings to around 8.88 BTC. That's right, Intelligent Infinity, which it bought at an average cost of $97,000 per coin, roughly 861 G's, baby. And on Feb 16th, HK Asia shared it purchased 1 Bitcoin, which was enough for investors to pile into the stock. And the next day, when the markets reopened, to boost its share price by nearly 93% by the close of the trading on February 17th. So if I was a shareholder in a major company and I was on any of those boards, and you have a significant say, I'd be like, yo, we need to put some form of Bitcoin on the balance sheet, because just by making the announcement, people like JV over at Crypto News Alerts will share the story and the stock will go on fire, because Bitcoiners will want to support us in our mission. And there's like 100 million cyber hornets just swarming the interwebs, and we need their support. And you'll get it. Embrace thy pretty little bitty. Shares in HK Asia were up 5% February 24th as the lunch break of the Hong Kong Stock Exchange, and we're trading at around 6.66 Hong Kong dollars. I'm not a numerology expert, but not my favorite number when I see the 666. But ironic. Let's just continue. Its current price and holds, HK's Asia stock could be set to close above June 2019 all-time high of $6.50. Hong Kong dollars, which is 84 cents, with its share price already up 1,700% thus far in the year. HK Asia's Bitcoin foray follows a recent trend of the publicly traded firms buying the crypto with the aim of boosting the company earnings. Exactly. In the announcement earlier in the month, HK Asia said its board has seen increasing popularity of crypto in the commercial world as part of the reason for the initial Bitcoin purchase. The company said in its latest note that Bitcoin buys are below the threshold for it to legally have to share it, bought the crypto, but made the announcement on a voluntary. Here's why they voluntarily made the announcement. They're smart, and they understand we're going to cover them, and they're going to get all the attention. And obviously not just me, but other, podcasters and Bitcoin folks around the world. Bitcoin has traded flat over the past 24 hours, but it's all good in the hood. Obviously, we got to get back above 100 Gs, and we most likely will before you know it. And this will all be a distant memory, but there you have it. Next story of the day, we'll discuss, actually, this is the big news, Saylor's $2 billion Bitcoin buy, followed by his proposal to Trump and for the United States to purchase 4.2 million Bitcoin, which is 420. Hey, happy 420, which is 20% of the Bitcoin supply. So let's dive into this. But first, let's discuss the ETP outflows, which is over $500 million. And then we'll get into the big breaking Saylor news. So crypto exchange traded products, ETPs, recorded significant outflows last week, continuing a trend of investor pullback, according to digital asset investment firm CoinShares. Crypto ETPs saw outflows of $508 million in the past trading week, following $115 million in outflows the previous week before that. The spike of selling pressure of the crypto ETP sector came as investors exercised caution following the U.S. presidential inauguration, which is when we hit the current all-time high, 109.3. Bitcoin ETPs, the largest crypto asset by market cap, again suffered the biggest losses, while XRP investment products saw another week of major inflows. Bitcoin investment products suffered the most losses last week, accounting for $571 million in outflows. And in contrast, altcoin ETPs recorded either some inflows or zero outflows, with XRP ETPs leading the buying with $38 million of inflows. XRP ETPs have seen $819 million of inflows since November of last year, which reflects investor hopes that the US SEC will drop the Ripple lawsuit and approve the spot XRP ETF. Let me know if you think that will get approved anytime soon. And also, the past trading week marked a rare event of BlackRock's iShares Bitcoin Trust, their ETF seeing losses of $22 million. ProShares ETFs were among the only major US ETPs that did not post losses last week, seeing $38 million of inflows, according to CoinShares. And on the other hand, crypto ETPs by Grayscale and Fidelity saw the largest outflows, amounting to $170 million and $166 million, respectively. And regionally, the majority of the crypto ETP trading again came from the US, which saw $560 million of the outflows. The negative trend was not reflected in Europe, which continue to see the steady inflows, with Germany and Switzerland leading inflows with $30 million and $15 million, respectively. And if you don't know, now you know. Now for our feature story of the day. Strategy buys 20,356 more Bitcoin for almost $2 billion, as their holdings are just shy now of 500,000 BTC. But don't take it from me. Take it from the Giga Chat. He just tweeted, Strategy has acquired 20,356 BTC for $1.99 billion at 97,514 per Bitcoin, and has achieved a Bitcoin yield of 6.9% year to date 2025. As of February 23rd this year, we hodl 499,096 BTC, acquired for $33.1 billion at approximately $66,357 per Bitcoin. And he's a great example of why we DCA, dollar cost average. And he says he's going to continue to buy the top forever, Laura. And yeah, let's dive a little deeper into this. We'll also discuss MicroStrategy, now known as Strategy, snapping up more Bitcoin, but also suggesting what the US and Trump should do, which is virtually purchasing 20% of the Bitcoin supply, which is roughly 4.2 million of the Bitty. So let's break her down. Strategy said it acquired the additional $2 billion worth of the Bitcoin, increasing the world's largest corporate Bitcoin holders total to almost 500,000 of the Bitty. Safe to round up, right? So yeah, this increased the firm's total Bitcoin holdings over 499,096, acquired for $33 billion at an average price of $66,000. The acquisition came after Strategy raised another $2 billion in a senior convertible note offering, probably at 0%, as the Michael Saylor, the Bitcoin alchemist, does. To purchase more Bitcoin, the firm announced February 24th, the notes featured a 0% coupon and mature on March 1st of 2030. So they got 5 years. Each 1,000 block of notes is convertible to 2.3 shares of Strategy's Class A common stock at $433 per share, a 35% premium over the current market price. The note sale resulted in about $2 billion worth of net proceeds for the company after deducting fees and estimated expenses, according to the firm's announcement, which says here, Strategy intends to use the net proceeds from this offering for general corporate purposes, including the acquisition of Bitcoin and for working capital. The $2 billion note offering was a part of the Strategy 2021 plan, targeting $42 billion in capital over the next 3 years. And it seems Saylor's on track to achieve this 2021 plan, putting $42 billion into Bitcoin within 12 months at the rate he's going. It's crazy. Split between equity and fixed income securities to buy more of the pretty little bitty. And Strategy said it already raised $20 billion of that $42 billion, fueling its Bitcoin buying spree, largely through the senior convertible notes and debt. Hence, Bitcoin alchemy. And despite sustaining $670 million net loss for the fourth quarter of 2024, Strategy is set to continue its long-term Bitcoin acquisition plan. Yeah, I think it can care less regarding their, net losses as long as their net Bitcoin continues to stack the sats. Smart man. And as the firm nears 500,000 in Bitcoin holdings, Strategy has an unrealized profit of more than $14.8 billion on its total Bitcoin holdings, as the Saylor tracker shows you right here. Now, 12 states in North America have reported holding Strategy stock in their state pension funds or treasuries at the end of 2024, totaling $330 million. Also, after the rebrand of their company to Strategy on February 5th, BlackRock, the world's largest asset manager, increased its stake in Strategy to 5%. So go figure. The largest shareholder of Strategy, Michael Saylor's company, which holds almost 500,000 Bitcoin, is BlackRock, as BlackRock controls the world. But yeah, this is a pretty big deal. Saylor's not slowing down. He's speeding up. And just to put this in perspective, he just purchased 5 times the amount of Bitcoin that the country of El Salvador holds in just one DCA buy, meaning El Salvador Bitcoin country has approximately just above 6,000 Bitcoin on the balance sheet. He just purchased 20,000 for $2 billion. It's really mind-boggling if you really put that in perspective. Now, let's dive a little deeper into the proposal for Trump to ultimately get his hands on, if they were able to do that. It'd obviously be a long-term commitment. But here's what he said, appearing at the 2025 Conservative Political Action Conference, February 20th. Saylor shared, "There's only room for one nation state to buy up to 20% of the Bitcoin network. And obviously, I think it should be the United States. Wink, wink, POTUS Trump. Hope you're listening. It's a way for us to emerge as a creditor nation in a matter of a decade. It is also a way for us to ensure we're leaders in cyberspace and the digital economy for the next 100 years. Let me know if you think the Strategic Reserve Bill for the United States of America will get passed. And could you imagine even the announcement of Trump or his crypto czar Sachs saying, yo, we're going to buy 20% of the supply. Cynthia Lummis, why are you so bearish? Proposing 5%. That's nothing. We need 20% if we're to maintain the leader. And also, here's a bonus prediction from Saylor I shared way back. Actually, I got 2 of them for you. The first one is the most bullish prediction I've ever heard come out of Saylor's mouth. When he was interviewed on Patrick Bet-David's podcast, he said, Bitcoin is on a path to be worth $100 million per coin, which means the US dollar will have lost 99.9% of its value over the next 100 years. Warren Buffett knows this, and Charlie Munger, back when he was alive, knows this. And I agree 100%. And that's why they're anti-Bitcoiners, these people who control the monopolies of the fiat dollar currently. And for the other bonus, this was from another interview I actually transcribed personally. Here's what he wrote. First of all, Bitcoin's going up by a factor of 10. Whether they can fix any of this stuff, it's going to be a grind up by a factor of 10. And FYI, a 10x from here would put us at $1 million per coin. Just because gold is broken. And of course, we're having talks of the Fort Knox audit, which is very bullish for Bitcoin, because if all that gold ain't there, which I am very sus that it will be there, it's just more, to show you that all that stuff can be manipulated. Unlike Bitcoin, there's no fool's Bitcoin, whereas there's fool's gold. It's going to replace gold, and now everybody in the universe knows they need a non-sovereign store of value in the form of a bearer instrument. Agreed. And for the last year, people said inflation may be coming. We're not sure. Now the mainstream narrative has flipped to inflation is here, bro. You need an inflation hedge. So it is going to grind up to replace gold. That's a fact, Jack. That's a black Jack. It'll go to 500,000 a coin, regardless of whether they fix these things. Here are the 3 things that are massive catalysts that will cause an acceleration. And FYI, spoiler alert, All three things have already transpired. And those three things don't take us to 500,000. They take us to 5 million a coin. Do you hear that? Let's go. Here are the three things. The spot ETF, which we clearly got, which went live January 11th, 2024. He said, where someone can go ahead and buy 100 million of the Bitcoin via the ETF security. I think that's one. Precisely. And we just got news last week that Abu Dhabi announced they're sitting on roughly $500 million worth of the Bitcoin ETF from BlackRock. Number two, your bank is going to custody it for you and lend against it. I mean, why wouldn't they? It's pristine collateral, especially with all the changes occurring and with a pro-Bitcoin administration, which is currently in place. Number three, I can mark it up or down on my balance sheet as fair value. Done deal. It'll be pari passu with the way I handle Apple stock, or at least that good. If you had a property with fair value accounting, by the way, it becomes pari passu to the way you handle treasury bonds on the treasury balance sheet. Treasuries are better than stocks because treasury is property, whereas a stock is a security, and you are capped at 40% of the balance sheet of securities. So they're no longer going to be perceiving it as liabilities, but they can now use it, right? So it would be a major breakthrough if you saw any of those three things. I'll end this one with this one observation I tweeted last week. I believe is very powerful. If the banks can hold the stuff on their balance sheet, then a whole new class of investors are going to buy it. People are going to put in multi-billion dollar orders to buy it as a treasury asset. And quoting Max Kaiser from yesterday's podcast, he says, $1 trillion buy orders are on tap. 2.2 million in play. I repeat, $1 trillion buy orders are on tap. 2.2 million in play, broskies. Nobody is going to sell it because there is no reason to sell it if you can borrow against it. And that's the bigger picture. So you'll be borrowing against your biddy. Nobody is ever going to sell it. And then I joked, and you won't be able to afford it. You'll be able to afford it, but you know everyone gets Bitcoin at the price they deserve. Ha ha ha. When the banks normalize it, you can draw a 100 million credit line at 100 basis points from an FDIC insured bank. At that point, right, we're going to blow through the market cap of gold by a factor of 10. Hear that, Peter Schiffmeister? It's not too late to capitulate, brother. I think the best thing is those three things are likely to happen, and they've all come to fruition a lot sooner than anticipated, ending it with here. I don't know if any of that will happen in 36 months or 24 months or 12 months. Well, it all happened. I'd be shocked if it is more than 36 months, and I hope it doesn't happen in 12 months because my view is the longer it takes, more progressive the grind. The more time I have to buy more of the pretty little bitty. And that's the man that holds, well, his company, roughly 500,000 of the BTC, and that's excluding his personal stash, broskies. And if you don't know, now you know. And welcome everyone to the stream. Breaking news, Satoshi has been found to live in Puerto Rico. Are you telling me the Nippinator is Satoshi? Always wears Bukele hats and shades and has a very successful podcast. Wait a minute. I am not Satoshi. I repeat, I am not Satoshi. Satoshi would never start a Bitcoin pod. That's a fact.